It was another ugly day on Wall Street. I mean, it was slightly better than yesterday, but still not that great. So you may be hearing the term bear market. So I'm going to explain what that is, and we're going to talk about why experts are saying it's happening right now and what it means for you specifically. And don't forget, the Fed is expected to do something tomorrow that is going to be a major factor in all of this and will impact you. So hang on, I'm going to get to that. But first, what's a bear market and what's a bull market? Generally, a bull market is a time in the financial market when the price of an asset or security rises continuously. Commonly, experts call it a bull market when stock prices increase by 20% from the most recent low, with signs that prices will continue to grow. Confidence is high, and a bull market is usually accompanied by a thriving economy and low unemployment. The longest bull market run was from March of 2009 to March of 2020. Now, on the flip side, generally, a bear market, which is what people are talking about now, is when stocks drop 20% from a recent peak. This kind of bear market drop is more severe than an average sell-off day. Confidence in the market is shaky, and investors want to sell or put their money into more secure investments. Bear markets can last for a few weeks or a few years. So yesterday, the S&P 500, which tracks performance of the 500 largest companies listed on the stock exchanges in the United States, fell 3.9%, which was more than 20% below its all-time high set in January, officially entering a bear market. So why is this happening? Investors are concerned about a lot of things in this economy. Certainly the persistent sky-high inflation, but also fears of a looming recession and tomorrow's interest rate hike announcement from the Federal Reserve. Economists believe the Fed will increase interest rates by at least 0.5% and may actually increase it, as I've reported before, by about 0.75%, which would be the highest increase since 1994. Now, why should you care about any of this? Well, in terms of the bear market, if you have a retirement account, it may be tied to the stock market, so that'll likely take a hit. As for the interest rate announcement coming tomorrow, any increase will make money more expensive to borrow for you, me, and businesses. So if you are in the market to buy a car and you have to borrow money to make that purchase, those rates will likely go up. And if you have a credit card balance, these interest rate increases will likely increase the percentage you're charged on that credit card balance. And if you have a variable rate mortgage or a home equity line of credit, that will likely be impacted by these increases too.